You are now listening to Contractor Talk with Richie Kidwell, the voice for the people. Join Richie alongside co-host property damage attorney Hans Kennon as they bring light to the taboo world of big insurance companies, exposing their tactics and fighting for justice. Hear stories from contractors across the state. Contractor Talk, here to protect homeowners and uncover the truth.
All right. Welcome to the show, Contractor Talk with Richie Kidwell, live on 94.9 FM and 950 AM, The Answer. We also take this to podcasts, so find us on Spotify, iTunes, anywhere you stream. Find us online at contractortalkpodcast.com, and you can find us on our founding website, or powered by the Restoration Association of Florida, at www.raflorida.org. Excited to have a show tonight and every night, every week, Monday night, 7 p.m. to 8 p.m. We are live here locally in the Orlando area, and then we take it to podcast and streaming everywhere you can stream. And my fancy co-host over here in his fresh new suit and attire. And again, you can check us out on YouTube. Subscribe today, Contractor Talk with Richie Kidwell, to find out what Hans is wearing today. What's going on, man?
Hey, man, I'm glad to be here. Yet another boom week on news, some crazy news coming up to talk about insurance companies not being honest.
No.
Oh, I'm telling you, it's unbelievable. I was shocked.
That's crazy. That's wild. We don't talk any about that on our show at all.
No, what a surprise.
Very much so. And to chime in on that, who has been in many different insurance disputes for the public. It's a public adjuster. His name is Sterling Scott. What's going on, Sterling?
Having a good day today, ready to start the week. I actually had a large seven-figure loss mediation this morning, and went pretty well. Maybe we can talk about that later, but
let's talk about what a public adjuster is and what they do. Most of the people listening don't know what a public adjuster is, even though it's literally in the wording. You work for the public. But go ahead, Sterling. Tell us what a public adjuster does.
Yeah, like a public adjuster, can be confusing. It says public, right? But we do work for the public. But a lot of the times, people would think that the more appropriate name would be a private adjuster. So we work on contingency to basically strategize the best outcome for your claim. And we get everything together from contractors, possibly attorneys. We have a great history with attorneys and relationships with attorneys and contractors, mold assessors, everything like that to ensure the best outcome that you can possibly have with a claim, residential or commercial.
That's awesome. We're talking about property damage here. So hurricane damage, if there's been damage from Hurricane Helene or Milton, or just wild pop-up storms, tornadoes, the hail, floods, those types of things, when you get into that mess, as a normal consumer, and you look at your policy, it's like it's stereo instructions. What is that? It's in a different language. I have no idea what it is. And Hans and I both try to say, well, it's hard to read all of that, all of the pages. The most important part, seemingly, is not only the coverages part, but what are the exclusions, what are now limitations, and caps. Those are very, very important to understand in your policy.
Right, and the policy is basically the Bible for what the claim should go by. But
mostly Old Testament. It's not very little New Testament.
Yeah, right.
A lot of fire and brimstone.
One interesting thing that actually was covered in the mediation this morning was how the appraisal stanza has changed from unilateral to bilateral, which means that if you want to invoke the appraisal process as the policy holder, it can be rejected on the carrier side. And if you're strategizing to where the appraisal process is the best outcome for you to expedite getting the proceeds from the insurance company, now that they make it harder to go through the appraisal process because they're changing the verbiage to be bilateral versus unilateral. And apparently that's happening often.
And certainly, and a lot of times too, like State Farm now, as opposed to even just being bilateral, there's a whole host of conditions and questions you have to answer and information you have to provide, and really just making it, as we would call it, a chilling effect. If you were just an insured and you said, well, I've heard about this appraisal thing, and you went to your policy and they said, answer all these questions, provide all this documentation, and we'll think about it, you would be like, I'll take what they're going to give me.
Yeah.
Unless you call a guy like Sterling, you call me, call somebody. But otherwise, that's all they do. They make it so everything now is hard.
Well, and they and there's no bad faith, right? Everything is difficult and now starting to swing in the favor of the insurance companies. Now, some of the legislation that's already proposed this year, we have session starting in March. Already we're starting to see insurance bills out in the marketplace, and one being mandatory mediation. And they take it a step further and say, well, currently, right now, you go to mediation, the plaintiff, the homeowner, does not have to pay for mediation. It's state funded in order to try to mediate before they bring it to litigation. Well, if this bill is successful that's been proposed, then before you're able to file suit against your insurer, you would have to go to mediation, and where each party splits. They each bear the fee, the cost within the mediation.
And how does that even? Why does it even make sense? I mean, the very thing behind the DFS mediation, Department of Financial Services, is that it's a service to the consumer who arguably is not sophisticated enough to understand really what's going on, much less have to pay $150, which is what right now they pay $300. The state does to the mediator and for the state to administer it. So now the insured is going to pay $150, have to pay it. Right, no choice to pay it, and in order to do something
or they give up. I mean, the more hoops that you put in front of a homeowner, the more likely it is that they're not going to want to jump through all the hoops. Let alone already nobody wants to get deposed. I mean, that's horrifying. You've had some defense attorneys in the past. I won't name any names, Kurt Allen, but they would make them go through an 8-hour mediation and just make them just want to hate life into a point to where they don't want to continue.
8-hour deposition.
Right, in every single deposition, right? And so, and there's fear mongering in there, and there's unnecessary steps that it would make a homeowner go through if there's a dispute with their insurer. And for years and years, you wouldn't need that. You would need that dispute, and then now there's a 10-day demand letter that has to be filed with through DFS, the Department of Financial Services, to the insurance company, so everybody's aware of hey, there's a dispute that of the damages here. Well, what's going to give? And the insurer, if they don't respond, then what are you going to do next? Now you have to spend more time going through mediation?
Well, the mandatory mediation, I used to avoid mediation at all costs because I felt that it was a waste of time. But even if the insured wanted to go through the mediation, and I say waste of time because 50% of the time they come to the table with very little to offer,
right? Nothing,
like an insult almost.
Yeah. Right.
But if they do come, with a sizable amount of money, they meaning the carriers, right? A lot of the time, the homeowners or the policyholder, whether it's commercial or residential, they'll take way less than what they should. So if they're forcing a mandatory mediation, the likelihood of them leaving a lot of money on the table because it's like a shiny gold toy, right, for the homeowner to just get this past them instead of going through all of the steps to fight through and get what they need for actual proper indemnification.
Right. Another thing that's coming up this session was impartiality of appraisers. Has anyone seen that? It's an interesting provision that it's and only the insurer can contest the policyholder's choice of appraiser. I know Sterling does a lot of appraisal work also, and if you've done work for that same person within the last couple of years, same party, very general language, they can actually contest the policyholder's choice of appraiser. The person they've chosen to assist them in their claim, it would be 627.70151. And it would, again, allow the insurance company to, which is amazing because the insurance company uses the same appraisers all the time.
Right. It's the same group of Kool-Aid drinking appraisers out there.
But the policyholder is not allowed to contest the fact that they're using basically a bought and paid for appraiser who's there every time for every claim they have. But the insurer can go, hey, it wouldn't be fair if the policyholder had an appraiser that they knew or had worked with before. Anything along those lines. So that's something also that's coming up this time. So for everyone out there, if anyone for listening about this issue regarding who you contact regarding the House and the Senate, if you want to be able to use who you want to use, and it's odd because Republicans are all about freedom of choice, right? School choice, religious choice.
It's supposed to be and deregulation.
Right, exactly.
What are we seeing?
And all this is that now the insurer gets to decide who the policyholder can use as a chosen appraiser.
Right.
Well, and State Farm, I believe, had a lawsuit a couple years back that made them win that argument. And I remember back in the day, I used to be the appraiser on the same files that I was a public adjuster on. And now that's no longer feasible.
Right. And that's just for certain policies because that's just State Farm. Others would I would represent myself in certain AOB disputes because the amount was so low.
Well, I mean, the problem we have with that State Farm issue. And obviously, if you're in front of a friendly court, things go your way sometimes, And as far as State Farm one, they basically said that if you were the public adjuster, you couldn't be the appraiser because it wouldn't be fair because you had already seen the property. I mean, that was it. And then they kind of stopped, and I'm like, well, what are they going to say next to actually make that make sense?
Right.
And then they just stopped talking. And that was what it came down to. They said an appraiser should be impartial and not have any prior knowledge of the claim. Why?
Talking about the impartiality of it, it's like, I know that the rule is supposed to be the appraisal process is like its own independent panel. And you're not necessarily supposed to be communicating with their client. And with the opposing appraiser, their client is the insurance company. But it's like, it's very clear that there's a lot of discussion and they're almost told what to do. Not to mention what you were just talking about, Hans, the fact that they're constantly rehiring the same appraisers.
Yeah, I think they get the idea what State Farm wants. I think when you do 100 of them in a row, I think you have a good sense. And I've heard appraisers say, "Well, I got to talk to the insurance company." I mean, you people, and you go like, "Whoa."
Yep, that's what I'm talking about.
Right.
Yeah.
And you go,
I got to get authority from my client. You're like, wait, what?
Wait a minute.
Right. So talk about impartial, right? And so we definitely have seen a pendulum swing in the last 8 years, I would say, that we never wanted to see, and I didn't think that I would see to date, because everything that the insurance carrier, the insurance company lobby has been wanting for the last 10 years, that they've been stopped because they're just crazy, all came in, and nothing but everything but the kitchen sink, and the kitchen sink rather, came in with these last couple of bills from 2022 to 2023, and now we're seeing that we're not seeing any reduction in premiums. And as a matter of fact, Hans brought an article today that I wanted to mention.
Yes, I read it this morning. Come out this morning.
Yes.
Right.
Yeah.
And it's something that we're all like shaking in our boots, going, "Oh my gosh, all these insurance companies are going out of business. I don't want to file a claim."
Right.
And you're almost scared as a client, and you're almost kind of believe the this crazy stories that we've been hearing, and we know, and we've talked about it on the show for years, and that we know there's insurance company misuse, handling of funds, and we see it all the time, and how they fight where they should not be fighting. We saw the articles of Citizens Insurance declining 77% of all the claims from Hurricane Helene and Milton. We saw that State Farm is around 50% denying claims of all the claims that were filed due to the two storms, and several carriers that were right behind them. And so I think ASI Progressive was the other one at 47% or something like that.
With Citizens at 77, State Farm at 50, Allstate around 48.
Yeah, Allstate. There you go. And so to add to that, we have an article that we want to talk to you about. Go ahead, Hans. I see you have some things highlighted.
No. That's it. I mean, we can go for a second. One thing I normally say, I talk about the pendulum. I hope would swing back this year, and maybe it will, maybe it won't. You never know till it's all over. But I've decided to stop calling it a pendulum when it swung away from the consumer. It was a wrecking ball from 2017 to 2022, and it destroyed all the consumers' rights to recover under the policy, allowed all these endorsements, allowed all these limitations, limited their ability. There's policies now that don't let you use a public adjuster.
Right.
They literally say you can't use a public.
Which, like, isn't that illegal? I think there's, like, when I studied for my test, it said specifically, excuse me, that we're not allowed to talk badly about each other. I mean, a public adjuster can't talk badly about an IA, and an IA can't talk badly about a public adjuster. So it's like that's in the state test to become an adjuster.
Right. No, and there are laws that protect and allow for the consumer to have the right to choose whomever they want, whether it be in a contractor state and or to hire a public adjuster. So a lot of this policy doesn't or conflicts with our state statute, and state statute wins over that. Some people actually, take that and as a barrier, and they won't move forward. But we've seen that OIR has been checked several times on allowing policies that shouldn't have. The Restoration Association of Florida has filed suit against the OIR for the Office of Insurance Regulation for allowances of certain policies. Like one of them was American Integrity, allowing for binding arbitration just to be auto-renewed when your policy was up. And without any notice, no discount, anything like that, you just had handcuffs on being able to go to take your insurer to court. Basically, you were bound to arbitrate this outside of the courthouse. So there was no fees, and each party must bear their own fees and costs. There are other parts of policies that should not exist, and so what do? They take it away from exclusions, so they don't have to reduce their premiums, but they add limitations and caps and things like that. Like you have a $5,000 sewer cap now, or you have a $10,000 water limitation on water damages.
That's a killer.
Yes.
That's bad.
That's really bad.
And they're not offering a discount to the homeowner, but it's like you look around in the state of Florida, it's like you need wind coverage, and you need water damage coverage, and you need sewer backup coverage. And they know that those are their biggest exposures. So what do? They limit those, and they keep the prices high without offering you a discount. And that's what we learned from that lawsuit, is that if they did not, if they would have offered them a discount in exchange for it, they would have gotten away with it. But they didn't, and so that got retracted. They weren't able to do that. Now, if they were to add those types of limitations or caps to your policy, you're supposed to get a discount and actually know that you're getting this less coverage for the same amount.
They're supposed to offer you a policy without those limitations and provide the cost for that, which I don't believe they ever do.
Well, this is reminding me of a claim I just signed on. It was a commercial claim, 8 buildings, and 2 of them have been condemned. But it reminds me of what we're talking about is how the policy changes, not in the benefit of the policy holder, right? So, for instance, sinkhole coverages, right? Sinkhole was, pretty easily paid by the policy. So what did they do? They decided to change what a sinkhole is and put it in a catastrophic ground coverage collapse, which means you have to have these 4 specific reasons for them to pay for what is typically known as a sinkhole. And one of them, which is it has to be condemned.
Right. It's Old Testament. We're talking about Bibles. It's Old Testament again. It requires the absolute. Essentially, the earth has to basically suck the building into the ground, into the netherworld, or like the Jurassic world, whatever that would be, in another planet. Or it's the requirements are crazy.
Right. Well, it's like, okay, it has to be condemned for this sinkhole to be, quote unquote sinkhole to be covered, which is the CGC that we were talking about, catastrophic ground coverage. But it's like, now you have a building that's condemned that either you can't be using or utilizing for a business purpose, or it can't be lived in. So now you're way less likely to come out ahead because you're in a situation that you can't just keep onto the building if you want that coverage to be established. And
thank you for kind of talking about that, because most clients don't understand what that means, and especially in relation to their policy, whether it be a business owner or a homeowner. So tell us a little bit more about, you touched on the subject of what a public adjuster is and does, but you also mentioned about some mediations that you host, but start there with what a public adjuster does and how you help folks every day with these complex insurance claims.
Yeah. Excuse me. It'd be my pleasure. So the best way I can explain it is think of a public adjuster as like a coach. All right, a coaching of a football team or something like that. It's like you want to make sure that your chronological time frame matches up with what your policy says, the coverages. So we're policy experts, making sure that the coverage is actually a covered peril. So we're filing an appropriate claim. And bringing a public adjuster in on the front end is always better in my experience, because you get a higher payout faster and initially, and you're preparing the claim much more efficiently. And what I mean by that is, we're taking our own documents, we're documenting all the damages, we're taking high definition pictures. My company uses Matterports on all of our losses, which is this machine that shoots out lasers and measures everything in high definition capacity. So we have a monetary value with the same software system that the insurance company uses, and my company utilizes level 3 certified Xactimate users, and Xactimate is the same software company the insurance company uses. So, we're preparing the claim, and we're negotiating the claim. We're making sure that nothing is said with any of the IAs, or IAs meaning independent adjusters, or the desk adjusters.
But they're not independent.
They're definitely, that's like the staff adjuster, right? Like, I love it when an IA says, I'm an independent adjuster. I work for all the carriers, so that makes me impartial. It's like, oh, okay.
Right.
So when you start writing estimates that make sense and they stop giving you jobs, then what do? You want your jobs, don't you? You want to keep getting clients. So typically what happens is they start writing for what the desk adjusters want, even though they're out in the field and the desk adjusters should be listening to the IAs. But the fact of the matter is the desk adjusters seem to be telling the IAs what to write for, not write for.
Right. And that's what we saw several years ago in 2022, right when they were changing the laws. They were making this fake insurance crisis, all the new news with all the legislators and saying, oh, everything, all the premiums are, that's why we're here to reduce premiums. Of course, no bill came out with any of those words together in any sentence at all as far as premium reduction. What ended up happening is that you saw more favor for the insurance companies and less for the consumer. But there was adjusters that went up there, independent adjusters, that says, hey, I have proof. And they went to every committee, and I met the guys there in the committee that said, there was 3 adjusters that said, we gave these estimates to the insurance company, and then I got phone calls later on by the client said, hey, what happened? I thought you wrote for the full roof replacement and this and this. Let's say round even numbers, they wrote for $30,000, the carrier gives them 8, and it was changed by the desk adjuster, and it left their name on it, the IA, the independent adjuster's name on it. So they were confused, and saying, well, this is my original file. This is what ended up getting paid and sent to the homeowner. It's unfair. It's not right. It's crooked. And it's something that needs to be addressed, and it never was addressed. As a matter of fact, we're going back to the year before where the legislature made a rule that said all the insurance companies have to turn in all of their expenses so we can see how all the insurance companies are spending their money. They all claim privilege, right? But then finally, after a records request, they actually got some data, and the Miami Herald just put this out a few days ago.
Well, there was some. Thankfully, there were some whistleblowers that were right. able to come forth. That took a lot of nerve for those guys to come forward, and I was happy to hear that. Because they would have probably just not let it happen. But the News Herald, right?
Yeah,
Miami News Herald came out with a very interesting little article. I happened to come across this morning. Of course, I shared it on my social media. But,
I think we all did on LinkedIn everywhere. Right.
One thing you brought up, Richie, was this this perspective that the insurance company is creating that they're broke or they need to increase premiums.
Crying poor, and they're saying that we barely have enough money to run operations. The problem is that the state of Florida allowed insurance companies to make a Florida corporation that can be separate than the rest of their company. So State Farm, for instance, is State Farm Florida Fire and Marine, or whatever the crap that is. It's a long name, mouthful, but it's Florida. So they can just cut that arm off, and the rest of the 49 states, whatever it is, they can continue doing business. And so,
but the thing is that neither State Farm nor any of those larger companies had that problem. They didn't need to cut themselves off from the rest of the mother company or the father company, whatever you want to call it, the primary, because they had enough money. They just gave it to all their friends in Florida, so they would appear to not have any money. I mean, so it wasn't like they were going bankrupt. They got to cut them off to save themselves here in Florida and protect the other 49 states. They literally took, and it wasn't necessarily State Farm. There's a whole group of them. But what they did is they took the money they did have and gave it to people that they contracted with or owned, and said, we gave out all our money. We don't have any money left. Right. And I know we're going to run out of time, I guess, pretty shortly.
Well, basically overpaying their subsidiaries and leaving their main operating account to pay claims very low, and in a state to where it broke a lot of regulations and that the state of Florida has on having a certain amount of assets in order to make it through a certain amount of policy and claim volume after storms and such. And so then you see Helene and Milton, and you see a lot of these claims volume start to spark back up again. And then they're like, oops, we're right in the middle of changing from our money from our left pocket to the right pocket, and then oops, we got caught with our pants down in the left pocket being short, and while the right pocket is bulging. And that was actually quoted in the article that Hans, you can summarize in the next 25 seconds.
I will.
You like that? No. But it is interesting that finally we're getting more and more out in the public. Of course, none of it was when we needed it, when the laws were changing in 2022. All of that was withheld until this article says until December of 2024.
Yep.
And mind you, we have significant law changes in 2022, special sessions, 3 of them just to address the property insurance crisis, and then a major one in the first session of 2023. All right, so we'll pick this ball back up after the break here, give some thanks to our sponsors. We'll be right back. All right, and we're back live. Contractor Talk with Richie Kidwell. Thanks for joining us. 94.9 FM, 950 AM, The Answer. And we're streaming everywhere that you listen, whether it be iTunes, Spotify, or you can like us and follow us on all of our social media, from Instagram to Facebook, and even on YouTube. Like, subscribe us there, and you can watch the video back. If you're a YouTube type of person and you want to listen to it and watch and see our reactions, then that is where you need to be, on YouTube. Outside of that, I find it easy to pick up the phone and hit Spotify, like us there, subscribe us, and you can listen to our shows. We tape them on Monday night, and it's on Spotify by about Wednesday or Thursday of that same week. So never miss a show. Every week we have a different guest for you. More on the property insurance market here on Contractor Talk with Richie Kidwell. So right before the break, we were talking about an article that just came out in the Miami Herald, and it references several other, I was going to say outfits, whichever, media outlets that were also trying to get information back in 2022 when all this was going down, the fake crisis in 2021, 2022, when we started seeing all of the property insurance premiums start to skyrocket. And that was due to the last OIR, Office of Insurance Regulation president or chair, David Altmaier, who has since left due to a law change.
To do what?
December.
To do what, Richie?
Oh, funny you ask, Hans. That's because right at that time, the Florida legislature made a law. They said, starting effective January 1st of that next year, you are to wait 6 years if you were a government official before you can be a lobbyist. Prior to was 2 years. So what happened around the middle of December, after he started a dumpster fire here in the state of Florida, David Altmaier resigns 2 weeks before the end of the year, and then is then named a few weeks later in a huge national lobbying firm. So
on behalf of policyholders?
Right.
For
So
policyholders or for the insurance company?
absolutely for the insurance companies. And
What an odd coincidence.
Isn't that odd? And I think that year is when the consumer advocate actually quit. It's like they have an office for consumer advocate, and it's the exact opposite. They're they are not for the consumer. Nobody in Tallahassee is. It's unfortunate because you would think so, because they pay our taxes. That's who funds these government offices. But what do? They just say we don't care, and they still do what they're going to do, which is take your money. Sterling, you mentioned Citizens. It's our state-owned insurer, and they have so many policies. It used to be before you'd have to have 3 strikes and you're out before you're able to even get Citizens insurance, meaning that if you can't get insurance and 3 other insurers tell you no, then you can finally apply for Citizens. But not in the past 5 years. It seems like they just opened the gates and said, you know what? Hey, we're going to offer low cost insurance and almost give people not a choice, because it's such a low cost, to get insurance with us, which has many limitations, managed care programs, all these types of crappy policies. And then what do? They form legislation that would allow them to make tons of money on takeout policies, meaning that they would group in all these policies at low amounts and then sell them to other insurance companies and even pay them for the entire premiums for the year up front. Yes, I'm talking about Slide Insurance, the luckiest man on earth after screwing up Enron. Yeah, we're talking about Bruce Lucas, who started Slide Insurance, came to Florida after that Enron debacle.
But had heritage.
Right, started Heritage and took the IPO, took it public, raised a lot of money, and made $80 million in 8 years. All this is all in articles all over Google.
Well, actually, it's interviews with him. A lot of this information is him telling people this.
Right. Now, tell me if I'm...
And then he parachuted out. You got to love the story. Then he parachuted out, started Slide, and then what happened when UPC went out of business? They gave all 91,000 policies that UPC had over to this guy, Bruce, at Slide, and said, here you go, here's all the policies, here's all the money up front.
Plus $70 million, I believe.
Yeah, and that's what I think it's very ironic that they called it Slide. Because it's like, okay, we're declaring bankruptcy basically, right? And so now you don't have insurance because the carrier's gone, and you're gonna have to go through FIGA to get your money. But we're gonna take every single one of these policyholders and slide them into another,
right?
And then say, hey, by the way, we're gonna raise your premiums, and aren't you lucky that you still have coverage now?
And it's an auto renew. And here's the thing: check your mail, because if you don't see this, then you will automatically be renewed to slide insurance at double the premium, and it's going to just zero out.
But aren't you lucky though?
Well, because that's what the letter says.
Right?
No, I mean, that's obviously facetious.
But that's what the letter says. I mean, because I got one. I'm not really sure.
Well, thank God you opened that piece of mail.
Well,
because,
you did, because we had
your escrow account would be nothing halfway through the year.
Yeah, my daughter's house over in New Smyrna that was insured by Citizens, and I'm like, well, I don't really mind. I was like, okay. We get a letter in the mail, and it basically says, congratulations, Slide's going to take over, and it was like 14. We paid like $2,500 from her. She has a little house over there. It was like $9,000 on Slide, but it was congratulations. And if you didn't not accept it, you automatically became a Slide
By
insured.
not declining, you automatically accept it.
And Bruce Lucas was quoted as saying, "It's the greatest business in the world when I can just send a letter and get a customer."
Right.
And
that's wild. And it's like he has the whole address book from Citizens. Be like, yeah, what do you want? Here, you can pick and choose.
UPC, or is it?
Well,
UPC?
he had UPC first, right? I mean, and then all of those claims, 91,000 policies went over to him, and all the claims went to FIGA, the Florida Insurance Guarantee Association, who is then paying out the claims, all by our donations, our assessments. All of us policyholders have to pay into FIGA, which is like condo unit owners getting assessed after a major renovation or whatever. That's what's happening here. We have to pay all the claims. Everybody that has insurance on an HO3 policy is paying in towards this FIGA, so FIGA can pay all the claims that should have been paid by Slide that went over from UPC but went to FIGA, but all the good stuff went over to Slide Insurance. It's crazy incestual stuff that's happening in the state of Florida. It's not good.
I remember with a UPC, they were delaying claims, I think, towards the end there
when they knew they were going out.
Exactly.
Right.
So they were like, hey, let's just keep taking the premiums, knowing full well we're not going to pay any of these claims. Declare insolvency, and then, ironically call this new company Slide, and then slide all those policyholders over. And, it's crazy to me when I think of something like that. It just sounds so incredibly immoral.
Well, it's like, it becomes like movie stuff. It's almost like you start thinking, it's like The Firm or one of those movies where you see it and you go, that's too big a conspiracy. They couldn't really make that happen. And then you go, oh, they all got together and did this?
I never used to be that much of a conspiracy theorist. But being in this industry, 10 years plus, it's like, it's hard not to become one.
Right.
Well, Rich and I were talking about this article that came out, and we're like, we've been saying this for years. I mean, literally for years. And this report in the article went back to 2022. Which is fascinating. And so it's mostly about what they call managing general agents, and I'll try to not make this too technical. An insurer, if they want to pay other people money, they open companies that they own who do things like the article says, such as claims handling, Alder, right, on behalf of Universal, underwriting services, accounting, and issuing policies. They hire other companies that they own to do that type of work.
Right. They overpay these subsidiary companies, drowning or emptying the bank account to pay claims.
And what they say is the profits of insurance companies are limited by statute to about 4.5%, which is not very enticing to investors. However, there is no cap on the amount of money or profits that the affiliates, these affiliates or managing general agents can recover. And just to jump to the end, because I know there's a lot of words in here, between 2017 and 2019, between Irma and Michael, the insurers in this study showed a net loss of $432 million. That sounds like a crisis, right?
Wow, that is a crisis.
However, their affiliate companies showed a net income of $1.8 billion.
Oh, there it is.
How about that?
Here's the next one.
Where'd the money go?
Well,
there it goes.
If you put in all 53 companies, the industry recorded $61 million in net income. Well, that's not good. That's a crisis, right?
I mean, it's income.
But $61 million off from 53 insurance companies. That's not
about
good.
a mill apiece.
And affiliates made about $14 billion in net income, according to the study.
There it is.
The author noted the affiliates of Florida-based companies were profitable even after they injected $485 million back into the insurers, gave the money back, and waived $208 million in fees during the same 3 years, helped keep the insurers afloat. So literally, they gave them so much money, they had to give some of the money back.
Holy shit.
To prevent insolvency.
Right, to prevent insolvency. That's wild. And so with the what is the name of that article? Just in case we're listening to it, then
sure.
the folks that are listening
what
can,
the headline
can
is,
research
it's
it.
in Florida News. It's in the Tampa Bay Times and part of the Tribune News Service. Florida insurance companies steered money to investors while claiming losses, study says. And what that's about is, at the beginning of the article, it says that the report, the most in-depth dive into the Byzantine finances of Florida's homeowners insurance market, reveals that as the industry was ailing and companies were losing money, executives distributed $680 million in dividends to shareholders while diverting billions more to their affiliate companies. So article initially talks about investors, but it really talks about issues with the affiliates, all these self-owned, self-dealing, who are required by statute to have a fair and reasonable compensation plan. And what they were doing, they were working on a percentage basis, not a fixed dollar basis.
Well, see, I get it. I get the crisis. They're trying. They couldn't find enough ways, legal ways, to spend their excess funds. That is a crisis.
Yeah, it is. It's like, well, I won't talk about that. But yes, but the profits of the affiliate and parent companies are not capped by statute, just for that insurance company.
Right.
Again, so they basically, it'd be like you run your house and you have someone walk your dog, clean your house, wash your dish. All these different people come in every day, and just do all this work, and you pay them thousands of dollars, and then you go, "Oh, I'm broke. I don't know what happened. It's a crisis.
Right.
I don't have enough money."
Right. Or you're overpaying all of the workers, and then your roof breaks, and you don't have enough money to fix it because you've overpaid along the way, right?
But all the workers you're paying are putting money back in your account on the side.
Right.
That's how that works.
And are those dividends, or those like side money that's coming in that's unreported?
It's just because the insurer contracts with the affiliate, and they say, we'll pay you 10% of whatever we bring in order to perform those basic functions: policy issuance, underwriting. Again, something like with People's Trust, they have the
managed care program,
rapid response team that they own. At least they disclose that, in all honesty. At least that's listed. But these are basically, you give all your money away, they give it back to you on the other side.
Right. And so it's important to understand that this information does exist. It is finally starting to come out more and more.
I got one more thing I got to say.
And then there we go. Yeah, we'll finish up on this article. It's important to understand, though, that this information and factual stuff does exist. It is available for you to find out, and we finally have some newspapers and articles that outline this and call out these insurance companies on their garbage, and so we all know what's going on. So we'll be right back with Contractor Talk with Richie Kidwell. All right, and we're back live on 94.9 FM and 950 AM. The Answer every Monday night, 7 p.m. to 8 p.m. live locally in the Orlando market. I was going to say in the Central Florida Orlando market. We're also on Spotify, we're on iTunes, and everywhere else that you want to stream, as well as our YouTube channel. So check us out there, ContractorTalkPodcast.com for our website, or go to YouTube and find us there on Contractor Talk with Richie Kidwell. Every week we bring to you a different guest within the industry, the restoration field, and folks that will help you, the consumer, deal with the one type of need that you might have to have if you have a property loss. And so we have Hans Kennon, is a property damage attorney. He's been here for several years on the show, but has been a lawyer for 20 plus years. I won't age you. You can discuss.
That's close enough.
Yeah. Okay. All right. So there we go. But in every week he does also offer some information on how to get a hold of him. He's got a new firm, a new name, Kennon Law Group. Yep. And so, but the same cell phone number will exist no matter if it's property damage or any type of insurance dispute. Hans is your man. How do we get a hold of you, Hans?
407-782-0258. That's 407-782-0258. I like to tell people, put the word lawyer in your contacts. Put my name, my phone number. Any issues come up, you feel free to give me a call. Happy to try to help you if I can. If not, we'll try to get you to the right person to do the job.
That's what's up.
So let me just jump in real quick. So on this article, a couple things came up. FedNat, when they went insolvent in 2022, this is talking about these affiliates, all these other companies. It was one of 9 companies under a parent company.
That was Monarch, right?
Yeah, FedNat went to Monarch. When Southern Fidelity dissolved last year, year, one of 6 companies under the same umbrella, and its holdings included a hunting lodge maintained at a cost of $485,000 per year.
Right.
So it gives you that. Such abuses, these affiliate relationships, are found a reason why companies go insolvent. The ratings agency AM Best, which rates insurers, last year found that affiliate relationships were the 3rd leading cause of insolvencies nationwide between 2000 and 2022. They also said most insurers in Florida have similar arrangements, which are enormously lucrative for some executives who were the highest paid in the nation in some years.
Wow. And we wonder where the money goes from the high premiums that we pay in here in the state of Florida.
And the problem was the legislators and even us, even though we talked about it for years, we couldn't follow the money because the insurance regulations first didn't require the disclosure.
Right.
And then David Altmaier, the former commissioner, wouldn't allow it to be distributed. And they talk about the fact it's unlikely Florida regulators knew the full scope of insurance money shifting arrangements until 2021, when lawmakers gave them the ability to demand more information. But using that power, David Altmaier paid a Connecticut-based consultant $150,000 to go through the information to generate this report. Now, what's interesting is all the really bad law came down in December of 2022. The Tribune here requested the report because they found out about it November of 2022, just a month before the legislation, and they refused to produce it until December of 2024, literally just saying, we don't want to give the legislators, or the public this information because it'll mess up the bad statutes, and even talk about the fact, and the very first page, the state's then insurance commissioner and Governor Ron DeSantis focused on legal reforms making it harder to sue insurers. And regulators have not repeated this study, though recommended by the report's author they should do this again. DFS has refused to do another study such as this.
That's crazy.
Well, what else do you need? I mean, for God's sake. I mean, we talk about it for years. What else do you need? I mean, I look at these 5 pages and go, is this enough to affect change? Right? Shouldn't this be enough?
Should be.
To affect change in the system somehow.
And you know what's crazy is that, because I spoke to my lobbyist this morning, and he said, try to get this on Florida politics. It's not currently on here. The Florida legislators need to know, and they need to know this before legislative session begins in March. And so first Tuesday of March, and for 60 days, our Florida legislators will meet. They're already meeting. There's already committees happening already on these.
Bills are coming out already.
Oh, yeah. There's 3 insurance bills already. Senate Bill 224, Senate Bill 230, and Senate Bill 554.
None of which have premium reductions that I recall.
No, nothing. Only mandatory mediation where each party bears their own fees and costs. So that's just putting more money back on the consumer's hands. And if they're already in dispute and they don't have the money to because they've been paying their insurance every month, then how are they going to afford to pay for mediation and then pay to afford you, Hans, if they need a lawyer, enable them to go to the next step, which is litigation, if they need so.
And what we're hoping is in this session, we've been told that there's already been some bills put forth that do provide some relief for that. For 28 years of my practice, I've been able to tell clients, look, the insurance company's going to pay you what they owe you, and they'll pay me separately. And we did that for a long time. In the last 2 years, since the governor changed the law that says you, the consumer, have to pay me out of your proceeds, which is really offensive because what I do is I recover money that they already owed you. I'm not getting you more money than what you're entitled to. I'm just getting what they actually owe you. And the governor says, well, the insured should have to pay you for the privilege of getting you the money they already owe you, which is really offensive.
And where's the leverage? It's like if
that's right.
There's no leverage. So what does it matter if the insurance company's position is sue me? It's like it doesn't matter to them at all.
And there's no bad faith hammer. There's nothing. Everything is gone where it used to be there before. It used to be Hans' attorney's fees plus a multiplier on bad faith if they didn't, and FedNat, you mentioned them, they got kicked out of Louisiana and fined so much because they took that same Florida slow walking claims handling over to Louisiana, and they kicked them out after the storm. They said, you can't do that here. They got heavily fined.
The worst day for insurers these days, they pay what they actually owe you.
Right.
That's as bad as it gets. Oh, we actually have to write you the check we should have wrote you in the beginning.
Right.
All right, here
but
it
they
is.
have a year or two delay, and it goes to their book: delay, deny, defend. Right. It's just that's what they do. In matter of fact, it's a good walk into if you are dealing with the claim right now that has been sitting there. Nothing's been happening for months, and you don't know what's going on. It's good to get. It's a good idea to get a public adjuster involved. It's no recovery, no fee. If they don't help you get any new money, they don't get paid at all. So you need to contact somebody that knows what they're doing. Somebody like Sterling with Trust Public Adjusting Group. He's the man if you have questions on what could be covered under my policy, right? It's not what does my policy mean, right? I can read it, but I don't. But to understand what coverage is, that's when you need to speak to, or what's covered and what's not covered. You see the State Farm commercials are he's like, oh, that's covered. Oh, that's not covered. This is covered. That's what you need Sterling for at Trust Public Adjusting Group.
Yeah, thanks for that, Richie. Trust Public Adjusting Group services the whole state of Florida. We're headquartered in Daytona Beach Shores on A1A, and we have 10 public adjusters that work, and I have them spread out over the state. But the majority of the public adjusters are on the East Coast and Central Florida around the Orlando area. But we do service the whole state. We specialize in all different types of claims. I represent properties that are insured for over $150 million, all the way down to, we do condominium units. I actually have one of my PAs specializes in that, as well as flood. His name is Dylan DeRayo. Great flood public adjuster. I know a lot of public adjusters that really don't know anything about flood insurance claims. But at Trust Public Adjusting Group, we also do flood, and we've done a lot of flood in the last few years. So we're experienced in the flood game, as well as small residential properties, all the way up to large condominium buildings and shopping centers. You name it, we do it.
Thank you for that as well, and for how you help consumers understand what's covered under their policy, and it is important. And Hans, I've learned a lot from you and your stories, and like to the point to where somebody's like, okay, I've got this, like the old lady that says, okay, here's everything, all of my inventory in my house that burned up, and Hans looks at it and says, huh. So you didn't have any silverware? It's like, oh no, I had silverware. It's like, oh, it's not on your list. It's like, huh. It's like some of those things you just totally blank on, and you're like, oh my goodness, or to the point to where if you don't have a kitchen or bathrooms and access to them, maybe there's additional living expense that Sterling can point out for you and say, hey, listen, we can help you get into a home that's similar to one that you have now while your home is being put back together. Maybe that's something that you didn't know that existed in your policy. Somebody like a public adjuster can be able to point those out, tell you what coverages that do exist, and help you meet the deadlines that are now set up. The state also, in all the law changes, they made it more difficult for the consumer, meaning that if you file a claim as a consumer, did you know that you have 60 days to turn in your sworn proof of loss? Do you even know what a proof of loss is? Right?
Yeah, some of those are actually built into the policies now. It used to be where they have to formally request it, and then you get the 60 days to submit it. But I know Frontline and State Farm are building it into the policies now, where the second you file a claim, you're going to have to put in a sworn proof of loss.
Tower Hill does the same, And when you read about proof of loss, even the courts make fun of it as being something. Basically, they put proof of loss existed. So if you had a loss in San Francisco in the 1800s, you'd fill out a proof of loss. This is true. This is the truth. That you fill out the proof of loss form. You'd send all your proof in, and back when people told the truth more, then you'd fill it out, and they would pay you, and they would mail you back whatever it was, and that document became the Bible, as we're talking about, of that claim. And the idea that now anybody uses them for any purpose, even they discussed about State Farm, and like no one uses that other than to try to trip you up.
Yeah. Well, I used to ride my bike to Eckerd's with a check from my mom and buy a pack of cigarettes and get the change back when I was like 10 years old. So it's like I still remember what she smoked too. It's crazy. And then, but just to point that out, it used to be in a much different time back then, where exactly these
Richie
types
on
of things.
the grift, it sounds like.
Right. And but in today's world, it's much more difficult. There's many more steps, especially as a consumer. So if it's your first time filing a claim on your property insurance, it's a good idea to give Sterling a call to talk about what is covered under your policy, what has happened since then? Have you done any repairs? Those types of things, and that Sterling can catch you up on. And Sterling, if somebody wanted to give you a call, how can they get a hold of you?
Yeah, of course. Our main line is area code 386-456-6885. And we have a general email, which is claims with an S at trustpublicadjusting.com.
Awesome. Claims at trustpublicadjusting.com is an email that you can then maybe even send a copy of their policy or any types of low offers that anybody has gotten for you to do a free review. Is that right?
That's right. And you can go online, trustpublicadjustinggroup.com. We have a place where you can fill out some basic information and we can give you a call back. It's a very user-friendly site. It's easy to find your way to that info portal. Also, talking about denials and things like that, we at Trust Public Adjusting Group overturn approximately 95% of our denials. If we take on the denial, it's very rare we don't overturn the denial to get you some payments. So
right, and that could be through appraisal or mediation, and or putting a perfect package together that even if it's perfect, it sometimes has to go to litigation. At that point, you're still able to get that overturned and money in the pocket for the homeowner.
That's right.
That's amazing. Thank you for being on the show tonight, Sterling. I love having you. Every time we learn a little bit more about what you do and how you help consumers. So thank you for being on here. And again, claims at trustpublicadjusting.com will get you right to Sterling and any questions you might have. Hans, thanks as always for joining us tonight. If you need an attorney, Hans is the guy to call. He always gives out his phone number. What's the best way to reach you via email, Hans?
Hans, Hans, at Kennon, my last name, Kennon, law.com.
Love it. Perfect. These are the guys, these are the tools that you need if you're filing a property damage insurance claim, or if you have questions about that, give these guys a call or listen to us after the show. If you liked what you heard or maybe didn't catch all the show, you can find us on Spotify in a few days or go right over to our YouTube page. You can watch the show from there. Thank you guys for joining us, and we'll talk to you guys next week. See ya.